Here we go. Good morning, everybody. Today is Friday, October 2nd, I believe it is, and it's going to be going until about 9:30 this morning. Keep in mind it's non-farm payroll report at 8:30, and so everybody keep an eye on that. There's usually it's a potential of there's a red folder event, and it happens every first Friday of every month, and it can get to be a little wild ride sometimes. Sometimes it's like a non-event, but oftentimes you'll see a major spike in the pairs on both directions. So if you're in a trade, it's not uncommon to get whipsawed and get stopped out on both sides of it. So just be careful with that. And trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your investments, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any questions. Today is Friday, October 2nd, and we're going to be going from 8 to 9:30. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during the session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. And before trading live, always operate with a written trade plan and identify roles for entries, exits, targets, and risk management. Now, like we said, this is a room that we're basically trying to teach people how to trade with technicals. We're using the wedges as our primary focus on where to use for the breakouts and for the entries. So keep that in mind as this is for learning. We're trying to teach people that don't understand technical analysis to give them a better understanding of that feature of your trading world. As we get new software coming out, it's going to be more and more important for you to be looking at how to trade technically. A lot of the trades that we have are the software coming out. Some of it is manual trading, where it does take a little bit of analysis to understand it. It's pretty easy analysis, but the more you understand about the technicals, the better off you're going to be in the long run in your trading career and trading world. So can everybody see my screen as we speak?
Yes.
Yeah, that works.
That works. Okay, good. All right. Well, we have a Euro-US trade. Do an alert. I'm going to draw it out here. Let me get myself set up. Find the right key here. Okay. It was a Euro-US, and it was at 7:15 this morning. I'll make this one yellow so it keeps consistent with what we do. I always mark the wedge alert with the yellow vertical line. I'm going to place a vertical line at 8:30 so we don't forget about the non-farm payroll report. I'm going to mark that as news, so we need to make sure we remember about that. And basically, I was looking at the overnight. This blue line over here is the day break. This is where the new day started. The foreign exchange trades 24 hours a day for the most part, but they do break for about a half an hour at about 5 o'clock, and the brokers reset their books pretty much. So this is the day break. But anyway, this was all the overnight session. I'm just going to take it from the last current pivot high, pivot low. It was a descending wedge, so I'm going to start off with the A up here, bring my B down to a pivot low. It was descending, and then come tuck it in as close as I can to where the alert was, and my D is going to be right here at the pivot, which is a slightly higher. So we have a low, a high, a higher low, and a lower high, and here's the break. Now, the thing I was looking at with this, the thing I don't like about this break on this is that as we look at our moving averages, the moving averages are really pretty much set to the downside, but we have our 62 on the 15 sitting right up here. And with the break, it's not, we don't have a lot of room from this pivot to where we have the break. So I'm a little concerned about this area being a trap. And if it does break to the top side, this would be our target area right up in here at the top of this big red candle, which is the origin of where this move was. It's going to have to clear this big wick here, and it's just barely clearing the C area right now, and it's coming up and tagging right into this 62. I would expect more of a bounce coming off of that. It may bounce and then penetrate through. It is flattening out, so that's a good sign for the upside, and we do have a potential target of from here to here. There's your 11 pips. You should be able to get if it does break and it can clear this wick here, you should be able to get your 7 pips to the upside. But be careful this area, especially so close to the news announcement.
Yeah, I didn't like that wedge, just because of the structure itself, where it's sitting. It's got really big wicks on it as well. So now the 30-minute 62 is right before, so it's like at 17:30. It's a 30-minute 62. It's just sitting right there. Could have something interesting happen here, but
yeah. Right now, I mean, it looks like it may break out to the top of this where the trap is. If you got in, you would have wanted to get in down lower here because, like, again, this is not the place to be getting in. I would be waiting for a significant pullback, especially with the report coming out. I would be real careful about. I wouldn't want to be jumping in here because even if it breaks to the top of this, where I marked my trap, if you can, unless you get a really good fill, you're still going to be looking at. You can still get your 7 pips, but you'd have to get a really good fill. Yeah, so you're gonna have to get through all these wicks that were over here on this for this move. There were some sellers. This is where origin came back. It retested right here, and so we could almost probably maybe move this trap down here a little bit lower, possibly. But you still have this area right here as it would be the target. And we got the people speaking in the background. I just apologize for that.
No.
And so right here, this would be the target. If it does break through the top of this wick right here, this would be the first target. And I think you might have a little bit of, and it's pretty much right about there now. And there's probably a fib line coming up right here. You see the grip fib line came right up to that green fib line, bounced off. And so just, like I said, keep your powder dry. Be careful with this one. We don't have any new alerts, do we? Last one we had was at 7:15 Euro US. Okay, that we just talked about that. Here's the Aussie. This one is, again, we had a 52 coming up right now. With this one, this was a little bit different. I was able to draw a trend line on the higher time frame, basically from the overnight. Here was the session break. Here was again, this is where this is where it started. This is where the day opened, came all the way down, came out and made a nice pivot high. But there's a nice major trend line all the way from yesterday's high through the night. And so this is the purple line is our major trend. I would expect it to bounce. And if it bounces off, you guys, this would be about the best target you're going to get until it either breaks higher or lower. Again, there was a little bit of traffic. It came right up in here, wicked up, came back down, retested, and then it did now starting to break through again. So, and there's a good chance that the Euro US could do the same thing. They are semi-correlated, and sometimes they. Right now, it looks like the Euro US may be the slow horse in the race in the breakout. But so on Friday with the non-farm payroll, I generally just don't take any trades. I just don't like the concept of it. We'll take this trap away. This thing was broken. We can get rid of that. We did get it. We haven't got the close. This is a 15-minute. Let me get on the 5-minute chart. And right now we did just get a 5-minute close above. Actually, we got 5 minutes to go. Came up, wicked up, came back, tested, closed above. And now it's trending up, but we got this trend line right here that we're looking at. If you did get in down below, I'd be looking to taking some profits if it can't penetrate through this trend. This would be let's see, this is the third hit of the trend line that validates the trend line. And so we'll see. And then right on the bottom part, we had this little trend right here coming from the C inside the wedge. It broke out of the wedge. So this is now the new wedge we're looking at. If it breaks to the top, we're looking up, coming up to this point, or if it breaks to the bottom, we still have to get through all this on the bottom. So let's just be patient, wait till the report comes out in another, let's see, what time is it now? It is, what time do you have here? 8:11, so another 20 minutes before it's, before the report.
I like the candle structures already. They're already starting to look better than what they were looking like before.
Yeah. It's a lot of times you'll see the big moves just before the report, and by the time the report comes out, a lot of times they'll snap back or they'll just keep on going. Or I mean, this is all pretty much in whoever gets the information on this is already starting to make this move on this. But
yeah, the speculators, right?
Just as easily. Yeah, there's speculators, and also people that I think the bigger money also knows what it is, and they're just getting themselves positioned for when the report comes out, so that they can. That way, when the report comes out properly, they can start selling into it.
Yeah, they don't use 10 pip stop losses and 20 pip stop losses. It's more like thousands. 1,000 pip stop loss, a couple hundred pip stop loss. So to them, it doesn't matter. Like, we're talking like big dogs. So
yeah,
they can just weather this storm.
They have big positions, but even their big positions, they're small positions to them, but they're big positions. They would be, 10, 50, 100 contracts at a whack. But then it's still only a small. That's still their 2% of their portfolio type of thing. But it's still big money.
Yeah.
Anyway, so right now we'll see how well this trend line holds. You can see it came right up, validated somewhat. See where our fib lines are. See if there's a fib line anywhere close by. Here's a blue fib line right here. So it's there again. There's some consistency with this. I should be on a 5-minute. Yep. So this is actually the zone that we're looking at through here. If we take this from this, this is about 21 pips in between this range. And if we go and we divide that into a third. Let me slide this down to the bottom third before the blue line. We have 2/3 above it. And this looks like this, and I would look at this as being a supply zone right now that we're looking at. And just see how that would, if we draw this out over here. And this is where you can see where this is the origin of where it was right in the middle of this area. Actually, this would be probably a better area right here.
Yeah, we're 15 minutes away from the announcement, so we're going to see some real big moves. You should, not financial advice, do whatever you want, but I'm not entering nothing until after the announcement.
Yeah, I enjoy watching it, just seeing how our charting can play, how effective is our charting that we're doing as far as where the targets are.
And don't worry about missing this move, because the last thing you want is to take the wrong side of this and end up 100 pips in the red.
And oftentimes what I'll see is that you could say, okay, I'm going to take it short up here, and the first move will be it'll go up about 10, 15 pips, take everybody's stops, and quickly reverse, come down.
Yeah.
And take everybody that gets short or goes long gets stopped out. Or actually, if you go short up here, you get stopped out when it comes up. you take it long, and then when it comes back, it stops you out and keeps on going. So I've
Yeah.
seen it's not unusual to see a 50 pip swing up, 50 pip swing down. The only way you could possibly trade it is if you have a target. Say, if it goes all the way up to here, I'm going to go short. And if it just drives it on up, gets your trade in, comes back down, that's about the best way. But if you're in the trade when it happens, it's very likely you'll get stopped out no matter which direction you are. So
first question of the day. Question.
Yeah.
On the non-farm payroll,
Yeah.
is it are the U.S. pairs affected more so? I mean, I'm sticking out. I'm just saying it's just a theoretical question. Are they mostly affected, or that doesn't really have credence across the board?
Well, the majors are going to be heavily affected. So anything with a U.S. dollar, but it does have impact on the vast majority of currency pairs. So even your crosses, they're paying attention to what's going on with the non-farm payroll, because the U.S. dollar is still at this point the currency of the world, and a lot of everything runs on that.
And pretty well, not pretty much, but all the alerts that we get are all U.S. dollar pairs, Aussie U.S., New Zealand U.S., British U.S. They all have a U.S. component to them, so they're all going to be affected by the report. Some in higher degree than others.
Thank you.
So we'll just let's see how much time do we have? We have another almost 15 minutes.
Yeah, another couple minutes.
The pre-announcement move came up.
Just winding up.
And so right now, the range that it's trading in right now is pretty much in the range of see how it came right up to that trend line? Came right up to the trend line and got rejected.
Yeah.
And so we have a bottom trend line,
which is out.
Yeah, this is where the bottom. This is the bottom of the move here, but here's the bottom of the major trend line. But if I scrunch this up here, you'll see that basically I don't have my third hit on my bottom one yet, so I just put it all the way out here to the apex. So right now I'm looking at this whole thing is trading inside this range from. Let me take this off if this gets too cluttered here. It's just trading between these two purple lines, and right now it's trading inside of a range. I would say of basically it's a 30 pip range, and for the non-farm payroll report, 30 pips is could virtually be nothing.
Yeah, that's 1 minute. That's just a 1 minute candle. I've seen it go 1 minute 50 pips. That it doesn't always happen, but that's what can happen.
Well, I've seen it do that. Did you say 1 minute candle? I've seen it do that in 5 seconds, 10 seconds.
Right.
It just spikes up, and the thing is, there's no way to get when it goes that fast.
You can't touch it.
You can't get into it. If you see the report and it does that, and you hit the market order button, I've seen it take as much as 45 seconds to a minute before you ever got filled. And then you're in no man's land, because now you're at the mercy of the market, because you just get put into the stream of orders that are being filled, and you're at a market order that gets filled whenever your number comes up. So it could work against you, but more often than not, it's going to work against you than for you.
Yeah, nothing great there, guys. Nothing great there. See, I'm starting to put a lot of emphasis on getting at least 3 hits on the trend line. If I can get 3 hits on a trend line, Al, that is a very nice wedge. If I don't get that, I don't put a lot of weight on the wedge.
Yeah, if you notice, when I draw my wedges, I try to get that 3 hit. I try and find descending or ascending slope. That will give you my 3 hits. Now, this one I have an anchor. I have a hit here. I don't have the 3rd hit yet. I'm going to take this one off here, but because you can see that, and you can see that this thing has a slight little trend going up to it. But it's also basically what it's doing is following the moving averages. Now, our moving averages right now, the 5-minute on this Aussie US, they're all in the proper order. You have the green, yellow, purple. If we go over to the 15-minute chart, expand that up, one's such a small. We have the orange, green, yellow. These are not in the right order. Basically, this is still saying this is the down move. This is saying we have the green crossing the yellow, which means, so right now that you're in the consolidation factor right in here. Once as it's consolidating, it's either going to break the upside, it's going to break the downside. But right now, we don't know. I suspect it may come up, break through the top here, and then come reverse and come back and retest this. That's not suspicious.
Hey, Al, you give me a couple seconds. I can show you what I saw on my screen and maybe have a potential idea of what can happen.
Okay, I will stop sharing. And are you ready?
Yeah.
There you go.
Oh.
You got it.
Yeah, all right. Let's try that. So, this is the chart that I had. I just threw a wedge here. I said, okay. So I got trend line. That's a little short, but I'm still okay with that. Trend line. So that's the 4th hit on a trend line. Maybe you're going to get a 5th hit. Okay. That's the bottom. This is the bottom. That's the only bottom. So if I was to have an idea of, or even take something, before I would take a trade, I would want it to bounce here, or I would like to have some kind of interaction with the upper trend line. Then I have enough room in here to take it.
How did you draw those little white vertical lines? What did you use for a reference on that?
Oh, nothing.
Oh, okay.
No, I just I just used the wick here. So I said wick.
Oh, that was there. Okay.
Wick.
Oh, I see it.
Wick.
That's an interesting concept.
Yeah, I'm just looking. I'm looking for some kind of validation here, and this is what's important. Is I like this trend line. This is a really nice trend line on the way down. Am I taking it before it touches the trend line? No. If it hits it and bounces real nicely, I'll take it on the inside, or I'll take it on the outside if it breaks nicely too. But that's where my target is. I'm not touching this at all because I really don't know what could happen here. So just if you guys kind of wanted to have an idea of what I saw in this one is going to be really important. So let's put orange. So that one's pretty much as important as you can get for now. Anyway, back to you.
Actually, okay, I'll take. Oh, let me take it back again. I was thinking about those little vertical lines that you have to put it one on top of the top trend line.
Yeah.
Just make one. Yeah, I'll just
make a
put it
clone.
right there.
All right. Yeah.
Make a clone, the top and bottom.
Yeah.
Just see if when the announcement, if it falls into that range, and then do the same thing at the bottom part and see if it falls into
that might work.
range.
Now, I don't think it's going to go to the bottom of the wedge like this, but we'll see.
Just see if any of those become targets if it breaks the top, or if it's
so tempted.
Yeah. So, all right, let me.
Yeah. You go ahead for a bit. I got to control my nerves because I feel like taking a sell. And I think it's going down, but I don't want to do that because I could hurt myself. So I think we gotta hold on here. Good morning.
Pedro has a question.
Yeah, he's taking a couple trades. Looks great. Consistent trading pattern. He doesn't trade inside the wedges. Only once it breaks the wedges in the 1562, the 5-minute 62 are the same order. Figure I share this with you guys. Oh yeah, that's very similar to
Is he saying that his wedges are similar to ours, or does he find them to be significantly different?
He was not talking about his specific wedges. He's saying that he's drawing his wedge, he's waiting for it to break, and he's waiting for the 15-minute 62, the 5-minute 62, and the 1-minute 62 to be in the same order.
Okay. Yep. That sounds like a perfect plan.
Yeah, that's a very good.
Yeah, when they're not in the same order, that means that one of those time frames is out of sync. But you want to have all the wind to your back when you take these trades. You want all the higher time frames to your back. You don't have to be fighting a higher time frame. If you do, you're just looking for like a really quick move because it's so far out of whack. Maybe on a smaller time frame, you can get a little bit of a run just till they become. But it's not a high probability trade when you do that. So right now we know that it came up. We know here's where the 60. Let me just reset this, make sure I'm in the right spot here. Yeah, pretty close. And we have I'll put both those 62s on here here's the 15, which came up right up into, it said broke that just in time to hit that upper trend line. Here's our 5-minute 62.
3 minutes. We're going to get some action.
We'll mark that down here.
Pedro did answer. He said exactly, I follow your wedges.
Oh, good. Well,
it doesn't take very long to start drawing these wedges, right? Like that. I'll be honest with you, a green trader, and if they contribute a little bit of time, maybe a couple hours a week, they could be live trading wedges in about 30 days. They could, like, it's a real reality because it's one of the easiest patterns to trade. So,
and they're highly reliable too. They're very reliable.
Of course they are.
And there's nothing fancy about them. There's nothing magical about them. The biggest thing is to know where your targets are when it does break. How much room do you have to a target? And you have to keep that in mind because once it breaks, and if there's like lots of clear sailing, then you just try and follow the moving averages till you get to a target or you get to your profit margin. But when you have like a break of a wedge and you have these different price points. That's one reason why we try and have 3 points. We have the anchor, the hit, and then the third hit on the trend line. Because once that gets broken, you still know that this was a descending, this was a high, this was the lower high. When it breaks this, it still has to get through this area. And so it gives you that target range once it gets through that range, then it goes up to the next major area that we're looking at. And that's why we've been starting to draw these higher time frame trends from usually the previous day's high to the current day's high, and then wherever it seems to fall into place where I can get the 3 hits to validate the upper trend line, because that's usually where your first target's going to be. Once you get through these two, and if you have enough room to the upside for that, then it's a good trade. If not, just wait. There's usually there's another train coming down the track.
All right, it's announcement time.
It's coming in. So we have 1 more minute. We'll see. Yeah, let me put it. I'll just keep it on the 5-minute candle here. Let's blow this up and see what happens here.
Don't chase this, okay?
And just for clarity, I'm not taking anything on this.
No, neither am I. So you'll see some internet.
I'm not going to even take it in demo. I'm not going to even take it in demo, but I'm going to mark these pivot highs, like this high up here. I'm going to mark that, this zone. Here's the news.
Yeah. All right. Down, bounce off 1-minute 62.
News announcement. So right now we have
Lots of
9
people
pips.
are struggling.
There's 10 pips.
Oh, you're on Aussie, eh?
I'm on the Aussie US.
Yeah.
Should I go to the Euro US? Is it probably doing the same thing?
Oh no. It's all
not.
the. It doesn't matter.
Oh, there it goes. Now it's let's see. Let me switch back and forth here. Same candle width, only a little bit different in color. It's all from the starting point.
Yeah. All right. Let's see. And off to the races. If it comes up and tags that trend line, that fifth hit on a trend line, that would be interesting. And that will grab my attention. And maybe look for a setup for the end of the day. But not
You see
not
how
too
it's
keen.
respected. See how it's respected the AC, the break of our wedge, and it's also respecting the top of the major trend line. So this is basically the channel that is trading in and I'm going to guess it's going to be traded to the downside.
Yeah, this is a retrace. Whatever it's pulling up, I think it's going to hit our trend line and reject it. I won't put any money on it, but just gut inside. I've seen it happen way too many times, and with that trend line being as strong as it is,
and if you didn't know this trend line was here, if you know it was here and you had this blue candle came on up, guess what? How many people do you think probably took this trade long right in here? And then they just got stopped out, and then they're coming back and say, oh, so now they're going to say, oh, I'm going to go short. They go short, and guess what? Now they just got stopped out again.
And that's speaking from experience. I've done that.
Way too many times.
Yeah.
Eventually you'll learn.
Because that's all ego, right? That's you thinking. Go ahead.
Matt and I are trying to keep everybody from making the same mistakes that we've made over the years.
Mm-hmm.
And just trying to save you many years of frustration. We didn't have these tools. We didn't have these alert systems when we started trading. And it wasn't until we started getting some of this stuff coming out that we've been getting through Auvoria Prime. This is not a plug for Auvoria Prime particularly, but in a sense it is, because it's the software that they've been coming out, which has just changed my struggles of trading to actually being profitable trading. And I'm not that, and that's just the way it is. They have some incredible software coming out, and it really takes a lot of the it really cuts out a lot of the learning curve that many of us struggled with over the years.
Yeah, it just compresses the time frames significantly.
And to be honest, that's why we have this room like we do, is because we just enjoy helping people to cut down that learning curve.
Yeah. And seeing people's lives change, that's the biggest thing. When people can get consistent, and we're just trying to share where we are, what we have learned over the last couple of years, and maybe there's some great lessons there for you, and maybe there's something that we might do that you're like, oh, I've never done that before, and you add that to your trading, and it increases your win rate. Then that's a win for us. The biggest high I get is when I get messages from people, hey, I just made so-and-so, and this worked, and that works, and now I implemented that into my trading. That's pretty much the best feeling in the world.
Trading is not rocket science, but it's probably one of the most difficult things you'll ever learn to do. And it's not because it's difficult to learn, it's difficult to control your emotions with it.
Yeah.
I always say that trading is the hardest part about trading is controlling the emotions. It's like sitting on a three-legged stool. There's the technical analysis, is what we're teaching here. We're teaching money management, about how big of a position to take. And we're trying to teach you what picture looks right to control your emotions. And I said that's the hardest, that's the most valuable leg on that stool, is that control of the emotions of your trading. Don't get greedy.
Oh yeah,
ahead.
no, it's good. I was saying it was 2 pips away from the trend line, and then it rejected the other trend line I had. So it was pretty close.
Here, this is 71.64 to
Mine was at
71. You have 2 pips. There's 2 pips.
oh yeah, you're on the Aussie. Yeah. I was on US, but it's all good. I like the Aussie US moves a little bit slower than the Euro US anyway, during non-farm payroll, but they tend to want to move in the same direction anyway.
Right now, this 5-minute candle, right now you have an engulfing 5-minute candle.
Yeah, that's a nice sell.
This is basically the range of this. This white box is a range of what that announcement was. And I say give us some time to see if it breaks out the range, and then maybe we can get a trade on this. But right now, there's nothing to trade. It's ranging inside a probably about 10 pip range, I believe we said it was. Yeah, there's about 11 pips.
Yeah, on Aussie US it's about 10 pips. On Euro US it's about 20.
You see right now we have a channel going on. We can extend this HC line, you can extend it all the way down. Right now, if it were to break the bottom of this wedge, it'd have to break through this D. We could possibly extend this channel down to here now. But keeping in mind that this is where the announcement was, and see what happens. It's coming right back into this little wedge. If it goes short. But right now, if you're looking at this box right here, you're in the middle. You're right in the middle of the box. And that's one reason why I take this tool and it lets them to draw and break that into thirds. So if it comes down to this area, it may want to come up and retest this. Each one of these thirds right now, if you're looking at this, is just 7 pips. 7 pips there, 7 pips to there, 7 pips to the next side. I don't want to take it in the middle because it will probably come down. It probably won't give you your full 7 pips to the bottom. It probably won't give you your full 7 pips to the top. If you can find a reason to take it long down here, now you've got 14 pips to the upside where all you need is 7. And I'll bet if I put my fib lines on, you see, here's my red fib line. If I take this right down to the red fib line and put, there's the red one right there. And then there's a blue one. Let's see, where's my next one here? There's the blue one that's up here. These are probably, this should be 7 pips here, I think. 9, why is that? And 1.
Maybe because you're above the red fib?
Well, there's red. There's the red one.
No, but
There's
when
the
you
blue
measured
one.
before, it was so.
This should be the green one, right? What am I on here? Let's see what size I'm on here. 5 minutes. So it should be 21 pips between the blue, red, green. Probably not. That's best probably tucked away and underneath it if I can just see it. Green, red, blue, and there's another blue one down there. There to the green, blue to green, and blue to red. Once it breaks to the bottom here, it's looking to coming down to this area. Take this off.
We're getting close to the bottom of that trend line.
Yep. We're coming right up into this bottom third. You can see how all these numbers seem to correlate once, even if you move them around with the same distance and just to go from point to point with the same distance, like third to third to third, so you can just see how it just plays into those ranges. So we don't have any other new alerts.
No, you don't have any.
715 was, nope, 715 was the last one still. I'm still on the Euro US. Or excuse me, on the Aussie US.
Yeah, Euro US has gone 5, 10, 15, 20, 25 pips to the downside.
Which means that the Aussie US may follow.
Yeah, later on.
I mentioned yesterday, one of my mentors mentioned about betting on the slow horse in the race. Is that when you have correlated pairs, and like the Aussie US, the Euro US, they're somewhat correlated. When the dollar is strong or when the dollar is weak, they both go up and down, but they'll usually go up and down together, but at different speeds. And if you see the one breaking out, oftentimes if you bet on the one that hasn't broken out yet, you can catch the wake of the first one. That's why I say betting on the slow horse in the race, that you see the one making the move before the other one actually makes the move. And then sometimes you can capitalize on that aspect when you talk about correlated pairs. Let's see what our size showing short. We have our whole moving average is showing one green, one red. And our strength meter down here, our RCS still says that the dollar is strong compared to the Aussie, which means dollar is the second currency of the pair, which means we're looking at the strength to the downside. Coming down, retesting the wedges all the way out the apex of this wedge too. Where our original wedge was. Coming down, retesting it. We're about 15 minutes past the report, so things are starting to settle down a little bit. Get a little bit of a hook.
Sorry, I'll get the alert.
He's got an alert.
Yes.
Oh.
British US 8:45. Let's go and take a look.
I like this wedge. I can tell you right away.
This one here?
Yeah, no, GU.
Oh, okay. Let's go to, let me
Oh,
pull
that's
that
right.
one up.
Matt's got the fangled dangled 8 screen.
I'm going to duplicate my chart. And I'm going to pull up the British.
It's descending, right?
I'll let you know in a second here.
Yes.
Okay. Yeah, I got a flat bottom. I made it flat. I got 3 hits. I've got almost 4 hits at the top.
Again, huh?
Let me see where moving average are. Everything is going up on that, up. And looks like we have all of our trend lines in the right position for the upside. And we're going to mark our chart up here. So we're going to go to the vertical line. It was at 845, which is where the alert was. Make this yellow. Try to stay consistent. There we go. There's a wedge alert. What's the ascending, you say?
Thought it was descending, huh?
Descending, Al.
Descending. Okay, so that's going to be from. So what I'm going to do is I'm going to start mine from. Here's the day break. So I'm going to come over here and see where the high and the low is. Descending. I'm going to start up here at the high. Come down here to the low. Come back up here to tuck it in as close as I can. Bring this down. I've got an anchor, a hit, a hit. I have an anchor, a hit, and a hit. There's the wedge. Take it to my 5-minute. I'll put it on my 5-minute chart. I'm going to tweak it a little bit, see if we can get it as tucked in as close as we can. Put my A over here. C is good. D, bring that over right there. Here's our main wedge. No break yet. Here's the alert. And descending, now it's also got a little bit of a descending factor here. Now, if it comes up, so basically, it's got to clear this area from here. This. Draw it from the C to the top of the A. It's close. So that's my enter the close area. Now, once it breaks, if it breaks the bottom, you see there's nothing stopping it from the time from D to here. This is where see this strong candle up. This is a huge candle. And on a 5-minute chart, that's big. So if it breaks the D, this is your target right down here. I like that breakdown to the bottom a lot better. We're already at the top of the move, came down, came back, retest the top of the move with a slight decrease. So this is a nice little area that this thing could really go short in a big way. All our moving averages have to get cleared out of here, though. Right now, they're all inside the wedge. We have the 562 right here inside. That needs to see a break with that. Like that. Right there. And I'm going to say I need to see a close below. And if we look, and now Matt was talking about sticks the other day. I'm going to draw my stick, the stick on this one. I like taking it pretty much I'm going to take it from the top of this line up here to the D. I usually look, whichever one, I usually take it from between the A and the C, and then wherever the D marks, or whatever one is underneath between, I'll try and catch the middle area. You could do, and it really depends on how
That's
aggressive
a
you want to
really
be.
big wedge anyway, so you can have
It's
two
a
take
big wedge.
profits. You can have your.
That's a good point.
I think your higher probability is definitely going to be just shorter stick, but there is the possibility of going from, like, I would say you wouldn't want to go back further than the A as your second target, you know, A top to the bottom of that trend line. That could be your second target.
I'm trying to get a clone here. There it goes. That's what I wanted. I'm going to go from the A, snap it up to the top of the A. This could be target 1, this could be target 2. And if you look and see, this is what's kind of neat about these things. When you see where the B is, you see where this is. If you draw a line to the bottom of this blue candle, that's pretty close to where the bottom of this first one is. If you draw a line to the bottom of the B, snap it, it's almost right on money with that. So you see how you can see these retracements are pretty much consecutive, and how the moves up also correlate with the potential move down. We'll lock that in. And we just move this over to see where it breaks. Let's measure the distance of this, see if there's enough room here. Oh, that's 45 pips. That's a big move. This is the British US we're looking at here. You still see my, you should still be seeing my British US chart, right?
Yep.
Okay. Now Matt's looking for a 5-minute candle to close 2 pips below this wedge. Is that correct, Matt?
Yeah.
So I'll tell you what I'm going to do. We did this before. I'm going to do it again. Let's do it here for reference here. And we're going to look at from, let's see, 97 to 95. Got 2 pips there. There's 29.25. Yep, that's about right. Boy, I tell you, that seems really tight on this chart. Usually, I don't know how you see the difference.
Yeah, it's because you've got such a, it's an optical illusion. The wedge is so big that your line is actually 2 pips. So you got a huge wedge.
See how it came right down to that and just bounced right off of it.
Yeah, that's validating that bottom part of that. That's really good.
That validates the bottom trend line. I'm going to go and clone this and put one to the top side. Ideally, what you want is you want to see break through the wedge with strong U.S. Right now, the dollar is strong to the British pound at 6-0 on the 1 minute. Let's check it out on the other three. We have 7 and 5, 7 and 5, 6 and 1. So that's interesting. We only have a 2-point spread here, 2-point spread here, and a 5-point spread on the 1 minute. But that's signifying a retracement. It still has strength to the downside with the dollar being the second currency of the pair. But right now, it's just not. It's just pretty much consolidating from the alert or from the news announcement.
Yeah, it would be a little premature to take anything at this point.
Even if you took it with this moving average, when it consolidated and broke, if you took it from there, let's see how much you have gotten. If you have gotten in at the break of off of this candle here, it still probably wouldn't have given you enough. I would have had you 7 pips. Would have had you 7 pips on that one.
Al, remind me to show you something later.
Okay.
Later on. We'll
So you can be around after. Are we going to be around after the meeting?
Yeah. Yeah.
Okay.
Yeah, I'm just gonna go prepare breakfast and stuff after, and
okay.
But I'll show you something interesting.
Right.
Maybe it's something we can implement in the future.
Sounds like a plan.
Yeah.
We're always looking for things to improve, even though we're teaching the same thing day in and day out. But we're also looking to see, as the markets change, how we can adapt to it and how we can, what signals and what signs we can find that we can implement to help just give those extra couple pips difference between a winning trade and a losing trade. And so we're constantly on the lookout for things like that. We're not deviating from the basis of what we're teaching. But we are making modifications to make just to get those extra couple pips. We don't want to over analyze. We don't want to over tweak the system, but we do need to make some modifications occasionally as when we find out we just don't get our 7 pips on the breakout. When we make modifications, so maybe try and get a little bit earlier entries, or maybe longer targets or things like that. But the basics haven't changed from when we started doing this. We draw the wedge, wait for the breakout, and look for our targets. Right now we're getting a little bit of a thing I like about this one is we had a high, a low. It's starting to trend, but the gradual trend. But here's strong move down, impulse, strong move down, reaction, strong move down, correction. If this holds true if these areas hold true from like this one to here, if it breaks the wedge, this could be possibly the first target area right down in here. Let's see. I want to see if this is. We go from here. This was a little bit shorter. This would be a wave 3. This would be a wave 4 or 5. It is a big wedge. It's also starting to develop a little bit of a trend. this one doesn't have the third hit yet. The third hit's going to be over here someplace. I try and put the arrow on the third hit. Right now, if I don't have, I just try to align it until I get one. Right now, this comes all the way over to this area right now. And all I'm doing is aligning the C with this little point right here before this move down, and waiting for it to come back up and retest it. Now we're strong by 3 on our 1 minute. Let's go back to our 5-minute chart. And if we can get if we can get strong by 3 on the break, it might be worthwhile taking this trade. What do you think, Matt?
You know what? GBP. Let me see. Let's see.
We don't have a strong, decisive. This 6 and 5. That's not a lot. 6 and 5 on the 15-minute as well. Oh, that's 5. Let me change this back. Let me change that when I do it.
Give me just a second.
It rejected again. Now it's coming up to retest the top of this trend line here. See what happens with that.
Yeah.
And now the British and the U.S. just flipped positions on the RCS on all 3 charts. The British is just starting to take over control of the
Yeah,
spring.
it looks like you're saying buy.
I'm saying that it just flipped over.
Oh, okay. Okay. I was like, wow.
I did not. I don't believe I said buy. No, I did not say buy. Although it does look tempting. That could break. We'll see if it can break out of this. But remember, if it breaks out of this, it's got this one to deal with.
Mm-hmm.
This is under the close zone. This is off the original wedge. It's a strong move up. Tagged it.
See what happens.
There's a room to the upside. The upside. All our moving averages are in the.
Ooh.
Yes.
Check that out.
Yeah, wasn't that a? Do you think that was maybe a head fake there?
Yeah. No, that was that 25 pips? That's the same length as the Euro USD.
Wow.
Well, I knew something was going to happen. I just didn't know what side it was going. So good that we didn't take that.
All right. So if you went short, you got stopped out. If you went long, you got stopped out.
Exactly.
Was there an announcement there? Let me see if was there an announcement?
No, probably not. It's probably the.
What time is it? 9 o'clock. 9 o'clock is a big time for.
I got a phone call. Give me a sec.
Get back on the charts.
That was beyond a head fake. That was a total twist around. Exorcist head.
Yeah.
Oh my gosh.
And look where we had that little wick or our measurement. Came right down there. That was our first target.
Crazy.
This is what makes it so amazing is that these pivot points always seem to have a factor to them. When I said, that close to enter, it hasn't closed yet. But also you have this moving average right here. Bounced right off of the 62.
Let's see. What's this Pedro?
chats we need to look at here?
Yeah, Pedro had a question. Did you say this is all market manipulation by the big dogs?
I would say that one probably was. That one probably was. Usually, the average true range on all the. If you look at the average true range on a 15-minute candle, let me pull up. It's down here. Let me see if I can put that up here. We have average true range. The average true range of 15-minute on this one is basically 21 pips. This is the average range of a 15-minute candle. Let's see what that one was. I don't trade this. That was 47 pips. That was over twice the average true range. So let's see, we have, let me take some of this off of here so we can see what we're doing. Can everybody still hear me?
Yes.
Yes.
Okay, I thought I might be losing my earbud here. If it goes silent, then I'll have to switch it out here. Take some of this stuff off this other chart. You can see a little bit of what's going on here. If you look at our 15-minute chart right now, it's bouncing right off the 62. These are not in the right direction. This is starting to switch over with the 5 starting to go for the 13. It's still not in the right direction. We still need a purple, yellow, green. The only one that's in the right direction right now is the 1 minute, and that's the white, yellow, green. Greens should be leading on all 3 of them. It's not over here. And we did get the cross of the 62. The yellow one hasn't crossed the 62 yet. So, and by the time this comes back, it may come back. By the time it is ready to cross over, should have it maybe retracement back to maybe get another entry into it. It is making a little wedge here, strong move down, short retracement. This one's got back to dollar strength. Dollar strength again. So just flip back over again. And now we have 7 pips. No, we have nice strength to the downside on all 3. Came down, we got a little hook, came back down, all of our moving averages. Let's see, let me move this one down here a little bit. They're all pointing down out of the 40-60 zone, out of the 40-60 zone, out of the 40-60 zone, and a strong move down, and now it's looking to retest. A little bit of a pullback. We have a little bit of a wedge right in here. We did get the close below on the 5, on the 1, and how much time do we have on the 15 still? So another 4 minutes on the 15-minute candle. So we do have a nice little wedge right in here. flatline that on the top. All these are in the right direction. Going to move this right over like that. And see if we get a break of the AC line. If we get it bounced, that'll be the third hit. If not, we have the penetration of this trend line. This one's not valid yet.
Yeah, that's still a little bit early, right? Looks a little.
With a strong move down and with this strong move down like that, if it breaks through here, I'd be willing to. We had the close below our D level here. Strong move down, came back up, retested it. Let's see, we're probably right by a Fibonacci zone, I'll bet. Let's see.
We had the
retest of the blue Fibonacci. And I'd be looking at coming down. Let's see, now the question is, it broke it, came back up, passed and checked, came back, rechecked it again. I'm good taking this thing short. Go ahead and get it in here. Mess it up.
Yeah, if you're taking this short, it's going to be a longer term short as well. So there could be quite a bit of movement to the bottom. But if you're just looking for your couple pips, yeah.
I'm just looking for my 7 pips.
Yeah.
Bottom of the green zone here.
I'm going to have to actually leave early. I just got a phone call, so.
Okay. And the reason why I took this is I've got a nice spread on all 3 time frames here. 7-0, 7-0, 6-0.
Yeah.
Strong move down, came back, and it still held the strength. And that's why I took that short.
Yeah, I see that.
You just covered your screen, Al.
Oh, okay.
Let's see.
What is the entry point that you have drawn there, Al? Pardon me.
Well, this is the entry right here. Actually, I would have gotten stopped out right up in here, but I'm still not convinced. This thing's pointing down. You need to have to stop a little bit higher, perhaps. But anyway, I did get stopped out, but I'm not convinced I'm not going to get back in again.
I think I like it for buy.
Looking for a buy?
Yeah. Got something I'm testing. Just want to see if it's going to end up being right or if it's going to be. I'm not putting real money in it, so I'm just checking.
I'm still on the mind for a short.
Yeah.
And the reason I said I'm hanging. I like this. I like the spread on this U.S.
I can see if that's what's happening.
Ava, what did you say?
I said I got into it short already.
Yeah, I got stopped out, but I got back in again. I'll do it twice. I won't do it the third time.
It's creating a 1-minute wedge. My project this weekend is to get my big iMac up and running again. I have to format it and get it all up and running so I can have all my charts on that big 27-inch monitor, and then have that as a separate computer so that I can use my other trading station instead of using all of my. So we're working on that. It's an older Mac, but as long as I'm just running the charts on it, it's gonna work very well.
That's one nice thing about having web-based platforms that you can use it on Macs and PCs and everything else.
Yeah, it's worth quite a bit. The whole deal with what is it? TradingView. TradingView is pretty phenomenal. So it's cross-platform. There's no, oh, you can't install this on Mac, or you can't do that, or you can't do this. You know, because when I first started trading, I was trying to use the Mac, and it was a nightmare. This program didn't work, and this one wouldn't, and I needed, like, it's just such a headache.
This goes back into the wedge and crosses this major trend line. That'll be out of this trade. I'm just giving this one lots of room. I took a smaller position on it.
Yeah.
I still like it as a short.
And then I'll show you why I thought it was a long.
Well, I'll either give you money or you give me money. How's that?
Yeah. Well, listen, it was right 4 out of 5 times this morning. And so this would be the 5th time, if it's right. So for it to be right for me means that this would be the bottom. But it could be wrong. So we'll see.
See where our Fibonacci lines are here.
Yeah, that's what I just did. I just did a Fibonacci retracement just to see an idea. We're hitting the 50% zone from the origination of the move, which was like the last night, the bottom.
The last night.
Yeah, last night's bottom. So we're at a 50% retracement of that, and look at that. She's coming down.
Let's check out our other 5-minute charts, see where we are with our trends and everything else. We have right now we have the 1362 cross on the 5. So right now everything is moving in the right direction got the purple, yellow, green. As I'm looking down here for the target, this is my target area down here.
Nice.
We know that this one is satisfied. I'm going to take this one off. It's a little 2-pip zone.
Oh, you did the 2-pip zone on the outside of GBP and you took the sell?
Yeah.
At the
Well, you were
5-minute
looking.
candle break?
I was looking for your 5-minute candle 2-pip. So I took that.
Oh, yeah.
That
Okay. I get you. Yeah. Yeah. It sliced through that pretty easily.
This was a candle that we drew from the bigger wedge.
Yeah.
I'm just going. That was from the A to there. So
Yeah.
I'm going to move this down here. I'll move that right to there.
Let's see.
See if it can. It bounced off the third time right off that area. Feel pretty proud of this spot right there.
Yeah. All right. Well, that's pretty much it for me, guys. I have an appointment. I got to bring the little man in to get some vaccines and stuff. You know, you don't want to.
All right, Matt. Well, thanks for your help. And what time do you want to try and get together? When time do you think?
Let's aim for noon or so. Like after food, and then we'll sit down. Maybe we'll have a good time. I'll show you what I was looking at. Oh yeah, absolutely.
Okay.
Have a good week.
We'll talk to you later.
All right, we'll catch you guys all later.
Yeah.
Have an awesome week. Bye, guys.
Bye.
So we have about 8 more minutes before the session is going to be over, and right now we're just sort of seeing what's going to happen here. Take a quick look at our Aussie US and see if that gives us anything. That's pretty much doing the same scenario. Still looked like it for a short. It broke here, broke the D area, broke our box, came back up into the box area. Still respecting this trend line. That's the Euro US. Yeah, that's doing as much the same thing. Pretty much the same picture all around. Looks like the euro, the dollar is starting to get a little stronger to the euro, so we may want to be careful about that with the British. I do like the fact we have our 1362 cross. This one off. This D did make a slightly higher high, but didn't close. Couldn't close higher. If this candle comes up and closes above the D, actually, if it closes above the 62, this 62 cross, if it closes above that, I may get out of this trade. See how big of the retracement from this candle, the retracement on this candle from here. Oops. From there to there, and retracing up to where the D is. That's right at a 38.2 to 50, right in the middle of 38.2 and 50% retracement. Let's see if it goes up to this area right here. If it breaks into this zone right, I'm gonna probably get out of it. Well, this is still only 60% retracement. I'm gonna put that as a supply zone there. I kind of like this top of this candle. I'd like to see it stay within If it breaks the top of that candle, then we'll probably have to get out of this thing. There's more room to the downside than the upside. So I'm willing to give this a little bit more room, knowing I've got all this area down here as a target. And then if I check my fib tool, which I'm on 5 minute, I am. I like this green line right here. Come down, test it. If it can break, and it would not be surprising to see it stop right about in between the green and the red. And I'm going to put the target right in the middle of it. And that should be from the break. 25 pips. If it can do it. And right now we wait. Can everybody still hear me? Make sure my mic's still working.
Yes, I can hear you.
Okay.
Are you still in this trade, Al, or no?
Yeah, no, I'm still in it. I'm going to stay in it until either it gets back up into that retest area or it gets down to my target. I'm just going to let it go. I like the fact we have the 1362 cross. I like the fact that I don't like the fact that it hasn't broken out of the wedge, but it still keeps it's just getting consolidated. We have I could see where it could spike on up here to retest this upper trend line and then fall down. But if it breaks this area, this retest zone, if it breaks that, I'll probably get out.
Yeah.
And it may just sit here for the rest of the day. Like I said, it could be a long wait, but that's okay. And I can see where it goes and break down into here and then zip right on back up again. Just like it did here, it broke here, came back up, break real strong, and then come back up again. This is certainly an area where it's consolidating. And that's right off of this point. We did barely get the close on this 5 minute. We did barely get the close of this D off of this red candle. That could be a little bit problematic, but I'm still okay with this.
Well, it still appears as of right now that it could go down with the different.
We're just coming up into the U.S. market open. And right there is that. Now the market is now open.
I'll go get the alert.
You get another alert?
I don't know. I didn't see
Yeah.
one.
At least.
What we got? Yep, we did. We got another alert, and it is looks like the Euro US descending. Nope, that was an old one. This one I'm seeing here is 715. Let me check this one out. 9:30 British US ascending now. That's the one we're looking at. I'm gonna switch earbuds here. Test. Can everybody hear me?
Yes.
Okay, I just want to make sure. Well, folks, it's 9:30, and we need to get out of this room. It's Friday. Enjoy your weekend. Watch this trade if you're in it. Be careful with it. Don't give it too much room. But I'm going to let mine go up until 29 pipe in this area. I'm just giving it more than just the normal 7 pips. I like this trend line. I still think it's got room to the downside. And if I'm wrong, I'll get out of it. So we'll talk to everybody later. Have a good weekend and be safe.